Alright, but today is the 19th of May, being a Tuesday. I'm just going to be doing a daily review for today's deliverance. I did take a trade today during the PM session, so we're going to have a very brief look of that, but just simply going to be doing a daily review. Just going to be going over the things noted right here, as well as the time frames that are noted here as well. So taking a look at the daily, we have the previous day's range, previous day high, equilibrium, previous day low, and we have the 1800 opening coming in right here, and take notice of the fact that that 1800 opening is relatively close to the equilibrium of the previous day's range. And then dropping down, taking a look at the hour 4, we have that 1800 opening right here, deliverance above the equilibrium of the previous day's range, and then it invites that sell side delivery motion. We engage with the previous day's low, and then we also engage with the previous week low, which is a respective weekly BISI high. And then we have that buy side delivery motion, delivering above that 1800 opening, forming a cracking correlation with what would be the London high. And this is occurring above the equilibrium of the previous day's range. So anything above the equilibrium, you can deem it a premium. So we're seeing bearish signatures occurring in a premium of that range. And then taking a look at the hour 1, really not much as well. 1800 opening, deliverance up towards the buy side above the equilibrium. This is during the Asia session. Have that deliverance down towards sell side, retrace during the London session, and we end up seeing London delivering into this very small hour 1 imbalance that resides right here, forming its high, as well as the fact that we engage with the equilibrium of the previous day's range, and then it invites for that sell side delivery motion to engage with the previous day's low, as well as that previous week low. So if we are just observing the hour 1 chart only, we have that deliverance down into this previous week low, being that respective weekly BISI high. This is your formation of an order block. This singular down close candle, we close above it, and there's a standard deviation that can be anchored here, being from this candle's low all the way up to this candle's high. Now you could say that this is a very over exaggerated leg, so you'd first look to anchor it to the body, being just this down close candle. But in relation to this standard deviation, it does project for that 30,000 level. So that -2, -2.5 is in direct alignment with that 30,000 level. But there's a bit of framework missing here. Can potentially deem this the low of the week. I would be a lot more confident to deem it low of the week if a cracking correlation was established here. But there's no cracking correlation, but there is potential for it to be deemed low of the week. It's just the fact that the hour 4 lacks that framework. In terms of if we're trying to frame the high and the low of the week, we're looking to align our time frames, which will make it a lot more easier in order for us to see that weekly power of 3. So when we're referring to the weekly chart, the time frame in alignment with that would be the hour 4 chart. So observing the hour 4 chart, there's a heavy lack of framework right here for us to work off of with. But moving on, taking a look at the M15, so now it's a little bit more descriptive in terms of what has gone on during the day. So we have that 1800 opening, deliverance above, equilibrium, Asia high comes in here. We have that deliverance down towards sell side, Asia low coming in right here. And then we have London delivering up towards buy side, engaging with this M15 imbalance, as well as the equilibrium of that previous day's range. And that is a point of inception for price action to continue that sell side delivery motion, as well as the fact that we're also engaging with this order block that resides right here. So this up close candle engaged with this high can deem this an order block. We have this one up close candle, series of down close candles, change in sustained delivery. This order block is located at the equilibrium of the previous day's range. When it comes to price being located at an equilibrium, the PD array that is going to be connected with that is going to be an order block, and the phase of delivery is going to be consolidation. So you have your consolidation that occurs right here. You have your order block located at your equilibrium. London delivers into that. We have that sell side delivery motion. And I actually forgot to touch on this, but with the Asia, we have an Asian standard deviation projection. So from this candle's high all the way down to this candle's low, -2, -2.5, -4, -4.5, that would be your Asia standard deviation projection. We end up engaging with that -2 level, retracement during London. London forms its high, and this offers another standard deviation level or standard deviation projection that we can project out in price. So London standard deviation, that -2, -2.5, -4, -4.5. So we end up taking notice to the fact that, for one, these standard deviations are in direct alignment with each other, But then for 2, that -2, -2.5, consolidation occurs at that level, which is also in alignment with our London low. So during the pre-New York AM session, we have that consolidation that is occurring right here at that London low in alignment with our -2, -2.5 standard deviations. And this consolidation is occurring just above the previous day's low until 15 minutes before our 9:30 opening. We end up having the engagement with the previous day's low. Kraken correlation was established at the time, so ES failed to engage with that previous day low. Honestly, I can't remember what YM did, but I know ES failed to engage with it. And this is ahead of our 9:30 opening, and then that invites for that buy side delivery motion. So change in stay in delivery was established at this point right here on the lower time frames, and then we have that deliverance back into that London range, engaging with this M15 BISI or M15 SIBI that resides right here. We then continue down towards sell side to engage with terminus. So -2, -2.5 standard deviation level. This was simply just a reaccumulation of orders to continue redistributing down towards sell side to engage with our -4, -4.5 level, because we had this previous week low, which was a respective BISI high. This was the ultimate drawn liquidity. Yes, that previous day low was engaged with, Kraken correlation was established, inviting for that buy side delivery motion, but we had just left our previous week low altogether. And considering the fact that it's still early in the week, being Tuesday, we're looking for potential low of the weeks to form, and this weekly BISI high would have been a very valid point in order for us to say, okay, this may serve as the low of the week. But engagement with that M15 SIBI, deliverance down towards sell side, engaging with that previous week low. And for one, we need to take a notice and acknowledgement to the fact of how we delivered down towards sell side. It was a very low resistance move. For one, this move towards buy side was also very low resistance. And once we breached past these two up close candles, the move down towards sell side was also very low resistance. This invited for this high resistance price action as we were making our way back up to engage with that London high right here. So this imbalance, this SIBI, M15 SIBI, is what permitted for price action to be rather high resistance as we were delivering up towards the buy side. Naked eye, we can say that that previous day low is in direct alignment with the consequent encroachment of this M15 SIBI. We can see how the bodies end up sitting on top of that previous day low very nicely. This candle right here, devil's mark, we close above it. Once we close above this SIBI, that invites for that high, low resistance price action towards buy side in a very spooling manner as well, which is what invited for this sell side delivery motion to be rather high resistance as well. But dropping down, taking a look at the M5 chart, basically the exact same as the M15, just a little bit more descriptive. We have that consolidation of orders during the pre-New York AM session, deliverance down, engaging with that previous day low ahead of the 9:30 opening. We have 9:30 open right here. We can see how 9:30 opens, devil's mark. This is tripping a parity, engaging with the market to believe that buy side is going to be delivered, and it's only going to be delivered. It was very aggressive and very fast, and it's tripping that parity to giving into a sense of FOMO, looking to join in on the move before the move is supposedly going to leave them. But the moment we engage with that M15 SIBI, we have the successful reaccumulation of orders. Now there's a M5 standard deviation projected out in price right here. So from this candle's low all the way up to this candle's high, we see our -2, -2.5 in alignment with that M15 SIBI. Now this is pairing our standard deviations in terms of, okay, we have this standard deviation from London, -2, -2.5. If we believe that this is going to be a reaccumulation of orders, there's going to be a standard deviation that will present itself around this level that we can utilize to project back into this range, and that -2, -2.5 will be used for the reaccumulation of orders, because we know that, okay, these levels, -2, -2.5 is going to be your reaccumulation of orders, redistribution of orders, or smart money reversal. If the framework has presented itself, we can look to say this is where we end the reaccumulation of orders, and now we begin redistributing down towards sell side. And that is what ends up occurring right here. So during this segment of price action, very messy, but Kraken correlation established itself right here ahead of our 10 a.m. opening, which is rather important. 10 a.m. opens right here, and Kraken correlation established itself ahead of 10 a.m. This invites for 10 a.m. to continue that sell side delivery motion, but it also means that 10 a.m. has not formed its high efficiently in relation to the 10 a.m. power of 3. So Kraken correlation is established here, and then we have that sell side delivery motion. We can see how rather low resistance it is taking a look at the M5, so we can only imagine how low resistance it is when we're looking at the M1 as well. But body standard deviation anchored to these two up close candles that reside right here, -2, -2.5, and this is where we have the smart money reversal for price action to reverse. And we can take a notice of the fact that that -2, -2.5 that we anchored to the bodies during the segments of price action is in alignment with the -4, -4.5 of the London standard deviation as well as the Asia standard deviation. We know that -4, -4.5 is projecting for a point of terminus. This is where the move is ultimately going to collapse, and then price is going to slip into a new phase of delivery. With this deliverance down towards sell side, we engage with our previous week low, Kraken correlation established here. Can look to anchor a standard deviation from this candle's low all the way up to this candle's high. -2, -2.5 projecting for the equilibrium of our previous day's range, -2.5 sitting on it very nicely, as well as our London high also being within the crosshairs of that standard deviation as well. Can take a notice of the fact of how high resistance this deliverance was as we were inside this M15 SIBI. Forgot to annotate it, as well as the fact that I forgot to annotate there's a Kraken correlation that presented itself here. Another standard deviation can be projected up from there, but quite honestly it's not as important. But yeah, that is quite literally it for today's deliverance, to be quite honest. Not really much to it. Once we engage with that London high, Kraken correlation was established. We're at our standard deviation levels. Would look for sell side delivery back into this range, which is what ends up occurring. But we can notice how high resistance this move is back down towards sell side. Where low resistance prints, high resistance is going to print, and where high resistance prints, low resistance is going to print. So in relation to the notes, Asia was the high of day, New York AM was our low of day. For NASDAQ, London continued the sell side delivery motion that Asia started. We had that pre-New York AM consolidation at that London low, and then pre-9:30 open, Kraken correlation was established with that previous day low, and then 9:30 expands towards buy side. The previous week low was left intact across assets, and that 9:30 expansion is simply just leading a general party to believe that buy side delivery was the motion for the day from that point on. Kraken correlation was established ahead of that 10 a.m. opening. 10 a.m. expands towards sell side, but no high formed for that 10 a.m. power of 3. The weekly BISI was engaged with for that 10 a.m. power of 3, and in brackets, potential low of the week. I feel like it's missing a little bit of framework, but it can serve as the low of the week. But to be quite honest, I'm not really, too fussed if it is or is not the low of the week, but it can serve as a potential low of the week, which is something that, is nice to have in mind. That buy side delivery was in a high resistance manner until the closure above the M15 SIBI. New York lunch had that expansion towards the London high, and then Kraken correlation was at the London high. New York PM retraced back into the range, power hour completing that retracement back into a discount of the range. So if we take a look at the M5 chart, the range would be this range right here. New York PM retracing back into the range. We have the 1500 candle being our power hour opening right here. We're not in a discount of this range yet. We can say a retracement is sufficient, fulfilled, once we retrace back into a discount of the range. We haven't retraced back into a discount. What we end up seeing is 1500 retraces back into this range, back into a premium of this range, and then we form the high for the 1500 candle, and then we have that sell side delivery motion. And where I ended up taking my short position would have been on this candle right here. So we retraced back into this range, and then we deliver back down. You have the inversion of this BISI and this SIBI that presents itself. We're also at the midnight opening as well. So simply look to utilize that for that sell side delivery motion. So we can just take a brief look at the trade. Honestly, really wasn't much to it. New York PM, M1 standard deviation towards sell side. -2.5 was utilized in terms of looking at it to be a reaccumulation of orders to continue that redistribution down towards sell side. We were at the midnight opening. We were also at that 29,000 round figure level. The M5 SIBI and BISI was what was utilized as the PD array, and M1 standard deviation was projected for that sell side delivery motion from when I entered, and change in staying delivery was the entry function. I actually forgot to put that in here, but change in staying delivery was the entry function. So if we just take a look at the chart, this would have been the execution, and I was targeting just a little bit under the 930 low. I'm not quite sure if this is going to get hit. The trade that I posted yesterday, it didn't even hit the full take profit until the next market open at 1800. But that was a trade that I was confident it was going to hit after the 1800 opening. It was going to continue that delivery motion that it was going through before 1800. This one I'm not quite sure, to be quite honest. We could continue that buy side delivery motion. And the reason why I simply say we could continue that buy side delivery motion is because we've retraced back into what we could deem an order block right here. So that's why I'm not quite sure or not quite confident in terms of it actually continuing that sell side delivery motion. But taking a look at the trade, the actual analysis, we have that buy side delivery motion. Now, I like to be located at a point of inception, being a reversal on whatever move has been occurring at, which would preferably be here. But it actually took me a while in order to actually trust this delivery down towards sell side, because for one, I knew that the deliverance would be high resistance. I'm not really a fan of engaging with high resistance conditions, but when you know that you're going to be in a high resistance trade, the trade is a lot more easier to sit through. When you don't know that you're in a high resistance trade, it's a lot more difficult to sit through because it does this. For instance, we have this order block. This is where the Kraken correlation presented itself. We engage with the order block, we deliver up towards the buy side, we come down. Deliver up, we come down. Deliver up, we come down. It's very antagonizing if you don't actually know what's occurring during this segment of price action, or why it's occurring during that segment of price action. And I say antagonizing from experience in terms of it's going to lead you to managing your trade in a rather ineffective manner. Moving your stop loss to break even early, or cutting the trade early because all of a sudden you lack the trust in the trade. All sort of things could end up occurring during a high resistance delivery, to be quite honest. But it took me a while to trust this deliverance down towards sell side. I wanted to see a Kraken correlation with this high that resides right here. YM ends up offering a Kraken correlation with this high. I've stated multiple times, I don't really like YM. I only like YM when it's really following suit with NASDAQ and ES. But whenever YM offers something that I'm looking for, I generally look for a little bit more confirmation, which is what ended up occurring here. So YM offers that Kraken correlation. We deliver down towards sell side, deliver back up towards buy side, deliver down, simply just high resistance here. This is all we're taking an acknowledgement of. So at this point, I'm simply saying to myself, okay, if this is well and truly going to be a point of inception for that sell side delivery motion, I can only look to get on side for an inception continuation model. So we engage with that -2, -2.5, and now at this point, I'm thinking to myself, is this going to be a reaccumulation of orders for the redistribution of orders, or are we going to have a smart money reversal and continue that buy side delivery motion? We engage with that -2, -2.5, and I'm taking an acknowledgement to the range where we're tracing back into. So from this candle's high all the way down to this candle's low, we retrace back up into an equilibrium. We failed to engage with buy side right here, this high, deem it an intermediate term high as it's formed inside of this imbalance. If this high was breached, it's not a good sign in relation to sell side order flow. We end up returning back down into the range, and this is occurring during power hours. So I'm framing a 1500 power through at this point. We end up returning back down into the range. We have this BISI right here. It's not being utilized in an efficient manner. And then we slam down. Devil's mark on this candle. And I don't know if we engage with this low, to be quite honest. It looks like we do. But this candle is what led me to, be convinced of, okay, this is sell side delivery motion. It was very aggressive, as well as the fact that we had the inversion of this M5 BISI right here. And then we further created this M5 SIBI. So then I simply look to anchor this range from this candle's high all the way down to this candle's low, locate where the equilibrium is, the OTE as well, and the M5 inversion for value gap was located above a premium of this range, so above the equilibrium. We come up, we engage with it, and that is when we look to execute on the lower time frames. So when we're taking an acknowledgement to the lower time frames, we have that sell side delivery, retracement back into the range above equilibrium, change in staying delivery here. This segment of price action here would have been a very valid entry, but I am taking an acknowledgement to the deliverance. So change in stay in delivery, we end up engaging with it right here. You can anchor your standard deviation from this candle's high to this candle's low, -2, -2.5. Same situation again. Smart money reversal or reaccumulation, redistribution of orders. At this point, I'm looking for it to be a reaccumulation, redistribution of orders because this move down towards sell side was the aggressive move I was stating earlier on in terms of we form that devil's mark on the close, we inverse the M5 BISI, and we also create an M5 SIBI at a later point in time. We retrace back into this range above equilibrium, engaging with that M5 inversion. After we engage with it, we take a notice to 1, how price action closes around it, very shy around that M5 inversion. But for 2, this price action is occurring around our 29,000 level, that round figure level, as well as the fact that it's also occurring around our midnight opening as well. So midnight opening coming in right here. All of this segment of price action is occurring here. We have that M1 inversion, M1 change in stay in delivery, and simply just market executed once we had this candle close right here. Very aggressive, displacing below that M1 inversion. We don't even return into it, and then we utilize this SIBI, and then we continue that sell side delivery motion. Now, to be quite honest, I can only attribute this to experience in terms of knowing that price action isn't going to return into this M1 inversion for a value gap. For instance, the execution I posted yesterday, change in stay in delivery was offered. I market executed right off of it because I knew that price action was not going to return back to it. And trying to explain it, to be honest, it's really just observing the deliverance of the candle live as it's printing. In terms of this 1 minute candle is going to open, we deliver up to the high of the M5 inversion for a value gap. How fast do we displace down towards sell side to have the inversion of this M1 BISI that resides right here? Was it early during the candle? Was it 30 seconds into the candle? Was it the last 15 seconds of a candle? When it's late into the candle, being like the last 15 seconds into the candle, I view that as we may not return back to the level that I want to see us return to. That injection of volatility is algorithmically ensuring that what is going to unravel out is going to unravel out. We experienced that as well today in relation to the 9:30 opening as well. Something very, very similar in terms of the last 5 seconds of the candle confirmed the change in stay in delivery, and then 9:30 right off the jump, spool right towards the buy side. But engagement with that M1 change in stay in delivery, we have that sell side delivery motion. Once again, very high resistance, but I already knew that I was going to be in for a high resistance deliverance down towards sell side. So the way I manage my trade during a high resistance deliverance is going to be different to the way I manage a trade during a low resistance move. Your stop should not be played with during a high resistance move. A lot of back and forth occurs and it can result in premature stop outs. It should only be moved at points where it's logical in terms of there is enough level of defense per se in order for you to say that if price action does come in, engage with my stop loss, this move is completely over. But we have that sell side delivery motion with the continuation that I entered off of. Standard deviation could be anchored from this candle's high all the way down to this candle's low, -2, -2.5, and that is where we ended up collapsing, retracing back into the range, and then fizzling out for the rest of the day. Can quickly look to jump in and take a look at what I was taking a mention to in relation to 9:30 and that change in stay in delivery. So ahead of 9:30, we have this change in state. A Kraken correlation was established here. Kraken correlation was already established with that previous day low, as we know from that daily review. So previous day low, we engage with it, and then Kraken correlation, and then we have that second stage Kraken correlation. So simply just going to draw it like this. And then we have a change in stay in delivery right here. This change in state offered itself probably the last 5 seconds of this candle. 9:30 immediately, right off the jump, displaces towards buy side. We don't even form a low in order for price action to continue that deliverance. Now, when we're observing this segment of price action, we can take a notice to the fact that for one, the inversion of this SIBI occurred. If we drop down onto the 5-second time frame, we can see that this blue line is where you'd have your M1 change in stay in delivery. Quite literally, the last 5 seconds is when that change in stay in delivery was confirmed. This is what I mean in terms of when it occurs very late into the candle, it's a sign that we may not return back into it. I'm going on a complete tangent here, but if we observe this 920 candle on the 5 second time frame, we spend more than half of the candle around the open. We open right here, and we spend more than half of this candle sitting on top of that inversion. And then all of a sudden, for one, we can see how price action is sitting very nicely above, but all of a sudden we have this candle displace above this high, and then we utilize this high right here, and then price action begins to get very aggressive. It's ensuring that we have that M1 change in stay in delivery before that 930 open for us to continue that buy side delivery motion. But yeah, that is basically it for the daily review and the execution.